A new era is upon us. Pulse has taken the world by storm as the leading Web3 social media. Beyond current features like casting, tipping, inscription trading, and earning, it's now elevating to the next level, on-chain.
Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
The Credify testnet is live, so head on over to demo.credify.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
What's up, ladies and gentlemen? This is Jimmy. How you guys are doing? I thought it is really time for a live stream, for an emergency stream. Let me know how you guys are doing today. And let's directly start with the topic of the day. I will bring my microphone a little bit closer. And I will share my screen, because without sharing a screen, what's the point of doing a live stream? I would invite all of you to prepare some questions. I really love interactive sessions with you guys. So let's start with the topic of the day, the topic that keeps us all awake. Who the heck is selling at this price level? Let's quickly check what is Germany actually doing. So Germany has been selling Bitcoins, and the positive of a government that basically confiscated Bitcoins from other people, it has like a benefit. And the benefit is, once they sold it, they will eventually run out of crypto. They will run out of Bitcoin. And I know for a fact it's not like the entire German government that's pro selling Bitcoin. There are some some people with opposite opinion. However, it is what it is. As of now, as you can see here on the chart, or on my screen, we'll make it a little bit more bigger for you. German government is still holding 23,244 Bitcoins as of now, which has a value of $1.34 billion. And honestly, if you look at a grand scheme, 23,000 might sound a lot, and it is actually a lot of money. It's 1.3 billion. However, when you look at the daily volume that Bitcoin generates, 23,000 Bitcoins is actually not that much. What I've, according my research, German government was selling them on the different exchanges, and since this week or a few days ago, they decided to sell this through OTCs. So probably their selling would have less effect overall on the market. We see also another trend, and that trend is Bitcoin ETFs, my friends. We still see rising numbers. BlackRock is still, or the clients, I should say, of BlackRock are still accumulating Bitcoin. When they accumulate Bitcoin, it's not for the short term often. Of course, they will have like a risk on, risk off approach and mechanism, many of them. However, they are very different market participants compared to us. As of now, 5% of all Bitcoins in circulation is now, it was purchased through the ETFs, through the international ETFs, the Hong Kong ETFs, the ETFs in Australia, Canada, the United States. These market participants, as I told you, are very different. They are different compared to me. They have a different risk profile. They have a different strategy. And most often, when they buy Bitcoin, it is for the long term. It's not for the coming weeks or months. They might rotate from Bitcoin to another asset. However, I do believe they will not paper hand Bitcoins as many of us do, or some of us do. So kudos to BlackRock's clients, Fidelity's clients, FinEck clients. Soon we will have a Ethereum ETF. This is just a matter of when and not if. So before we move on, ladies and gentlemen, this is a quick note, a quick message. We have a very popular newsletter. I genuinely believe that going on Twitter or Discord or any social media that's free to access, going there for alpha is a waste of time. I truly believe that newsletters are more concise, they contain more to the point information and alpha. This is a newsletter you don't want to miss out on. It comes every week, often on a Tuesday. It's free and it contains a lot of alpha. We cover trading psychology, fundamental analysis, TA. Often, sometimes we give calls. Everything that you need to make advantage of this cycle is in this newsletter. I would say don't miss out and go to the website theburpnest.com/newsletter, or just go to theburpnest.com and the newsletter, you will find it immediately in here in the resources part. So let's go now a little bit to the fear and greed index. You guys know that I'm a trading psychologist. I'm an NLP master coach. I love to read the markets through the emotions, and I see a lot of emotions on the chart. 27 is pretty extreme when it comes to fear and greed. And if we would go to the extremes here on this chart, we see that often the extreme fear often does signals a potential bottom. And especially when you combine this with TA, I'm not saying that you should use this in isolation. I think that would be really foolish to use the fear and greed index in isolation. However, it gives you a understanding of the current sentiment. And if the sentiment is really negative while we are still in a bull cycle, that's the best, most accurate divergence you can have. So basically, bull cycle is still intact while the sentiment goes down. This is one of the strongest divergences I have seen personally, because whenever a asset trends down into a key support level, and I understand we lost a few key levels. We lost the 21 weekly EMA, we lost the 200 MA and the EMA for that matter. However, the structure is still intact. Often what happens when we're declining for a quite long time, we are declining here since this since the 7th of June. So we're declining here for 32 days. 32 days in Bitcoin land or in crypto land is a lot of time. What happens then is when we are in declining market, people give up on hope. They were gonna give up on Bitcoin, and different biases are kicking in, such as recency bias. So we give more weight to the negative price action rather than this entire structure. This structure, in my opinion, is quite bullish. And why I'm saying so? These ranges often create a good base for the next leg up, as you can see here, as we can see here, as we can see here. And people, they tend to forget that 80 days ago, 80 days ago, we had the Bitcoin halving. Why am I mentioning the halving? Well, it's because after every halving event, especially since the second one, and I understand we haven't experienced many halving events, thus we don't have a lot of data points. But the point I want to make is every time when we had an halving event, Bitcoin was ranging for quite a long time, approximately between 100 and 160 days. Sorry, I should say 120 and 160 days. The yellow line here displays the third halving. And after the third halving, what do we see? We see a ranging environment of 161 days before we saw the real leg up to the upside, which marked here in 2021 the or I should say November, the bottom, the top. Excuse me. It's getting late here in the Netherlands. So we're still in this consolidation phase, and this can take another 80 days. We're already here in this consolidation phase for 80 days, more or less. And it can take, another 80 days, more or less. And that would bring us to end September. And normally September, October, they're more bullish months. If you go to seasonality, oh, sorry guys, the wrong one. This is the Bitcoin chart. I should have opened the other chart. August is a pretty good month historically. September, I said like it's normally a good month, but apparently it's not such a good month. Perhaps I should go to the Bitstamp chart because it would give you a little bit more of information. So historically, August is a pretty okay month, and September is actually the month. And you should, see everything in context, right? So this 65 was basically when Bitcoin was trending very hard. This was in a bull market, like 2021, 2023 was declining. So September is not really that good month. October as well. So that's a good piece of information to keep in, to take into consideration as well. The thing I like of the Bitcoin chart, let me refer back to this chart, is although we're declining, Bitcoin has made its first oversold divergence, and this is not only a divergence on the RSI but on many other different oscillators. If I would plot here the Biblicator Pro, it gives me a 64% bullish divergence, and I believe this is actually a double bullish divergence on the RSI, on the MVI, on the CCI, maybe even on the OBV. We can quickly check. Let me check who's in the chat with me. Tigacoin, Spain or France? I would say, and now I'm realizing I picked up really the most stupid time for this live stream, as Spain and France are now playing. I would say France. I think Spain does more beautiful soccer football, but I think France will win. I'm saying this, by the way, because most of my followers are from France. To be honest, I'm actually I'm actually supporting Spain, but I think France will win. Yeah, the OBV, I'm digressing a little bit. So also here on the OBV, we don't see a very strong divergence. mm, mm, not too convincing, but I like the cross that's happening here. So all with all, I do see support level. I see a bullish divergence. What I also see is a potential RSI breakout here, and it should appear in the next few days. Or you're going to see a rejection, and then this trend line on the RSI is still valid, and it might drop even lower. As of now, I do believe that this is a swing failure pattern. Not this one. This one. This is a swing failure pattern. We're back basically here at the range. The RSI and the other oscillators are showing divergence. So I believe the path of least resistance is to the upside, but not, I would say 60.5K would be the next major resistance level. But we also have this 200 EMA to reclaim. We also have on the weekly, we have also the 21 EMA to reclaim. The rat, this rat line here is the weekly EMA. Normally, when you see the 12 EMA and the 12 and the 21 EMA curling down, it means the trend is extremely exhausted and wants to reverse. If the blue line crosses the red line, then we might have a bear cross. If this happens on the weekly, it does often signal the end of the existing trend, which is the uptrend. From a Burbicator Pro perspective, there's something I don't like, and that's this. If we go to the weekly chart, we see here the Burbicator Pro current time frame trailer, and it hasn't flashed a bull signal for a long time. The last time it flashed a bull signal, a bear signal, was in January 2020. Now, last week, it signaled the first bear signal since January 2020. If we not quickly reclaim the 60K level, then I am afraid that this could go down towards this zone here, the 50K level. But there is some support level here. It's more visible on the daily chart. So this quick consolidation phase could act as the next support level. However, I do believe that the path of least resistance, and this is what I said last week, and I was invalidated, but according to the new data I have, I do believe that this might be the temporary bottom, and that we might see soon 60K area. So let's quickly do Ethereum. So what do we see on the Ethereum chart? Ethereum against Bitcoin. This was the ETF pump. We haven't fully retraced. This support level is still holding, and that's very nice. The Dixie, this is not something I revisit every day. Like once in a while, it just gives me an understanding. Okay, how strong is the dollar? Is this nice for risk on assets or risk off? What does it do? And in this case, I'm pretty neutral. It's an uptrend, and then it's rearranging. So I wouldn't overanalyze this. This is something that does concern me a little bit. So what do we see here? We see here a major rising wedge, while the Burbicator Pro is signaling a bearish divergence. So it's on the RSI and it's also on many different oscillators. If we go to the daily, it's very obvious that the S&P is basically in price discovery. But the question is, for how long? Is if everyone wants to be part of a trend, and it seems a lot of participants want to be part of this trend, this uptrend, this major uptrend, this undeniable uptrend, who is left to sustain this trend? I am afraid that this might be a top, or this might lead at least to a correction. A rising wedge and a strong a bearish divergence is not something I want to totally, it's not something I want to fade. This is the correlation coefficient. Let me check. Yeah, it's not sure why it isn't here. Perhaps I should re-edit. There's something that worries me a little bit. Yeah. And that's this. The correlation coefficient, the Bitcoin S&P correlation coefficient, sits now at minus 0.83. What does it mean? It means that Bitcoin and the S&P is inversely correlated. This doesn't happen that often. Some say, okay, this might signal a potential bottom. But in this context, we have a Bitcoin at a crucial support level, and it lost a few crucial levels already. The point of control, which I mentioned last month, it lost the 21 EMA in the weekly. It lost the Publicator Pro current time frame trailer. It lost the 200 MA. You feel me? We are at the support level, but the support level is not, that extremely promising. And now we have a correlation coefficient of minus 0.83. I believe that Bitcoin could be, again, more correlated to S&P. When the S&P tanks and it declines, most likely it will drag with him other assets, risk-on assets such as Bitcoin. So if the S&P declines very hard, we get like a hard rejection, and it gets rejected, towards 5328 or 4,976. This might be not ideal for Bitcoin. So I see the S&P tanking, and I also see Bitcoin tanking. And then we might see this correlation coefficient going up again, crossing the zero level, which is the neutral level, by the way, into a more, more correlated level. There are a few coins that are trading above their 200 MA. Last week, I did a quick test with the team. 96% of all Binance USDT pairs are trading below their 200 MA. But there are a few coins that are still trading above their 200 MA. I think it's really the time now to earmark, to list, to make a watch list on your trading view with the coins that have shown strength, relative strength against Bitcoin. Oh wait, no, that's the wrong one. As you can see here, it's still trading above the 200 MA. And there are a lot of other coins. Well, sorry, not a lot of coins. 4% of all USD pairs are still trading above the 200 MA. Maybe the distance is not really, a lot, but still, there are some coins. And I personally believe that it's really good to chase the coins that have shown strength rather than a lot of weakness. One of the other coin I believe looks quite good as well is Solana. Also, one of the few coins that's still trading above the 200 MA. It's still trading above this SNR level. I was for a long time quite against Solana, to be honest. I changed my mind. Um, I believe that having Solana in your long-term portfolio might not be a bad idea, along with Bitcoin, of course, and Ethereum. Uh, but I do believe that Solana might have the from against Ethereum and Bitcoin. I think Solana might have the could have the strongest run for the next quarters, even though the Solana ETF is really far away. So if Solana grows, the entire ecosystem grows as well. That's why I have a position in Ray for quite a long time. This one is still also trading. It was, whipsawing here through the 200 MA, as you can see. But nonetheless, I believe this is also a chart that displays strength rather than weakness. By the way, guys, we do have a free scanner on the website that gives you quickly a really good understanding. Okay, where's Bitcoin sitting now on the 4-hour chart, on the daily chart, on the weekly chart? So the way how to use this is when you see Bitcoin and it's bearish on the daily, so it means like bearish structure basically, and bearish on the weekly, and you see a bull forming here, meaning there is strength on the 4-hour. That is actually a signal to check out the Bitcoin chart and draw your alerts, to set your alerts. The same for Ethereum, Solana, Pepe, and many of these other coins. For example, this one on the 4-hour chart, it's bearish. On the daily as well, on the weekly as well. This is not a coin really you want to trade, unless you're interested to create a long-term portfolio. Then that's something else. I would say give this a try. This is like a free tool you can use. You don't need to pay anything for this. It's 24/7 available for you. Let me check if we have any questions before we wrap up. Yeah, 30K, 33K. So I would say if you believe that 33K is possible, never say never. But whenever we approach things in the markets, let's do level to level. There's a strong level here around 51K. There's a strong level here around 40K, and 30K is all the way down here. All the way down here. Do I rule out this? No. Do I think this is the likely scenario? No, as well. I would say, level to level. I mean, if 33K is the level where you want to build a position, that's interesting. I would say like go for that, but don't expect that we personally gonna touch 33K, as it is quite far away from its current level. I think I covered everything I wanted to cover for today. Again, a reminder, check our newsletter. It's free. Every week there's a lot of alpha. Check the crypto scanner, and also know that we have a very active Discord community where we share a lot of calls, a lot of investment ideas, a lot of concepts. We share a lot of trading psychology insights, a lot of fundamental analysis. This is one of the most recent calls we have shared. This was 7 a.m., which was, let's say, 14 hours ago. Popcat, we just DP'd one, which is really nice. We share a lot of alpha here, and we are also really honest. Whenever we call something, it's stopped out. We measure all our performance, our PNL, our win rate, our average R, accumulated R. and so forth and so on. And that's something we all should do. I believe as traders, we are extremely transparent when it comes to our performance. I would say give this a call, give this a try. This, of course, comes with a paid plan, but there's also a free plan where you will get every day an up-to-date Bitcoin report. Ladies and gentlemen, thank you very much for joining me.